Bismillahirrahmanirrahim. Hi everyone, today in this video we are going to finish this chapter journal entries. We are going to discuss the few adjustment entries, how these adjustment entries to be passed. First of all, we will talk about the closing stock. For closing stock in the sense unsold goods at the end of the accounting period. Whatever you had purchased the good and unsold goods, this unsold goods is known as the closing stock. And how the value of closing stock we will record, what journal entry we will pass. So for recording the closing stock, we will have to make the journal entry closing stock account debit to trading account, because this closing stock is to be used for determining the gross profit or gross loss. We calculate the gross profit and gross loss from the trading account. So we will transfer this amount into the trading account. Now come to the next transaction. You can write here narration being closing stock transferred to the trading account. Next transaction, outstanding expense. How you will record these entries? If there is any outstanding expense given, suppose rent outstanding, salary outstanding, wages outstanding, if any outstanding amount is given. As we know that outstanding expenses are those expenses which has been already incurred but yet not paid. It means this is the liability for the business. And if the liability will be increased, then the credit balance will be increased. So suppose there is a wages outstanding. So we will write here wages account debit to outstanding wages account. This entry we will pass for any type of outstanding expenses. If it is rent outstanding, then we will write here rent account debit, because rent is an expense, and if expense will be increased, then it will be debit. And outstanding expense is a liability for the business, and here liability is also increasing, so we will write here in the credit side. If salary is outstanding, we will write salary account debit to outstanding salary account. If rent is outstanding, then we will write rent account debit to outstanding rent account. So for outstanding expenses, this journal entry will be passed. Now come to the next adjustment entries. Prepaid expenses. Prepaid expenses. Prepaid expenses in the sense all those expenses which has been paid in advance. Paid in advance in the sense this is the income for the business. So we will write in the debit side of the prepaid expense. Prepaid expense account debit to expense account. Expense in the sense relevant expense. Suppose you had paid insurance premium prepaid. So we will write insurance premium account, prepaid insurance premium account debit to insurance premium account. You have paid rent advance, so we will write here prepaid rent account debit to rent account, like this. Now the next adjustment entry will be for accrued income. What do you mean by accrued income? Accrued income are those income which has earned but not received. It means this accrued income is also the asset for the business. So we will write here in the debit side, because from accrued income your asset value will be increased. So we will write in the debit side accrued income account debit to income account, because in future you will receive this income, not you will have to pay this income. If it will have to pay, it means liability for the business. If you will receive, then this will increase your asset of your business. Suppose interest is accrued, then you will write here accrued interest account, debit to interest account. Now, come to the next adjustment entry. Income received in advance. Income received in advanced. Then what entry you will pass? This income is unearned income. It means you have not earned this income and you have taken this in advance. It means this will be the liability for the business, and if liability for the business, it means your liability is increasing, and if your liability is increasing, then where you will write it? Credit side. Suppose you have received rent in advance, then what entry you will pass here? Rent received account debit to rent received in advance account. This entry you will pass it. Now the next adjustment entry is depreciation. As we know that depreciation will be charged on the fixed asset, and which type of fixed asset? Tangible fixed asset. So depreciation will be the expense for the business. We will write here in the debit side of the depreciation. Depreciation account debit to, we will charge this on asset. So here asset name will be mentioned, assets account. If it is machinery, then we will write here to machinery account, because asset value is decreasing here, and if the asset value will be decreased, then it will be shown under the credit side. Now come to the next entry, interest on capital. What entry you will pass here for interest on capital? As we know that business and the entity of the business both are separate body. If the partner or proprietor has provided interest to the business, then after a certain period of time, the business will provide their interest. If the partner or proprietor has contributed capital for the business, then after a certain period of time, business will provide interest on these capital. Here, interest on capital will be the expense for the business, but income for the proprietor or partner. Here we are doing the accounting of sole proprietorship business, not the partnership business. So this entry, interest on capital and interest on drawing, this entry will not impact our transactions, or this entry will not impact our balance. So we will write here the entry interest on capital account debit to capital account, because this is expense for the business, so it will be shown under the debit side, and your capital balance will be shown under the credit side. This entry will not affect your balancing figure. On the same way, if it is given about interest on drawing, then what entry you will pass here? For interest on drawing, same opposite entry we will pass here. Capital account debit to interest on drawing account. Because interest on drawing is an income for the business, so it will be under the credit side.